Hi, you guys. Just want to talk about a few things, few topics. Just want to remind everybody that what's happening, and not a lot of people are paying attention to what's happening in Switzerland. There's a lot of stuff going on. I know people are looking at the federal rate hike right now. They just raised the rates by 25 basis points, but kind of jittered the market a bit. I didn't expect 25 basis points to bring the market by a lot, but oh well. Anyways, what's going on in Switzerland is, as you guys are aware, the UBS merged with Credit Suisse. They bought them, they had a deal, but it raised a lot of red flags because they overrided the stakeholders' vote. Normally, when two companies merge together, or like say what happened with UBS and Credit Suisse, UBS bought Credit Suisse, they have to go through. They should, to make it fair. To make it fair for investors, shareholders, they should go through the shareholders vote before they merge. They have to agree. But in this case, Switzerland, the Swiss government used emergency laws to override stakeholders' vote in order to merge. Because usually what happened normally with any company, any bigger bank buying a smaller bank, they have to go through a stakeholder vote. They bypass that. So not only it's bad as of now, but it's also raising red flags and concerns among the future investors, because now investors are looking at this like a big red flag. There's a lot of concern because as an investor, I wouldn't want to be investing in an institution that's gonna use emergency laws to bypass shareholders' votes. So it's already looking like a big, gigantic red flag. It's not looking good, and a lot of these institutional investors are not happy around the globe, because who wants to be investing in a institution that can bypass stakeholders' vote? So it's not looking good. There's a lack of trust now among the investors. It's awful, and this is gonna definitely leave lots of marks even after they bought them. I mean, nobody wants to be investing in an institution that can just screw up all the investors, all the bondholders over emergency merge. Another thing I want to talk about is the Saudis that invested in Credit Suisse. They lost lots of money. They had 9.9% of they represent 9.9% as a stakeholder. So they had 9.9% of the company's assets. Okay? They've lost $1.75 billion. Because Credit Suisse was worth around $9 billion, and now it's UBS bought it at almost $3 billion. But with this merge, Saudi Arabia lost $1.75 billion. It might be even more because the right numbers haven't been disclosed. So there's rumors now it's 1.75 billion. It can be more. There's also hidden numbers. Of course, they're not gonna disclose the official numbers to avoid panic. But it seems like they lost a lot. They lost 80% of their investment. 80%. And another big stakeholder is Qatar. they have 6.5% of the 6.5% of the Credit Suisse assets. So they represent 6.6%. So both Saudi and Qatar lost billions of dollars. It's looking really, really bad. And they represent a big portion of Credit Suisse. It's not looking good. And I was gonna say a lot of the bond holders, because after they liquidated or they transferred the COCO bond, which stands for convertible contingent bond. Well, they liquidated that and went straight to the shareholders' pockets, right, after the merge. So they screwed over all the investors that were investing in the COCO bond, convertible contingent bonds, and they just liquidated that. They converted that to cash and they gave it to the shareholders, right? That screwed over a lot of the investors in the COCO bond, and now they're filing lawsuits like crazy. So yeah, this is a big concern, guys. This is a big concern, guys. And a lot of these bond holders are not happy. Yeah. And we know that, because I looked it up, the contingent convertible bond that was created during the 2008 financial crisis, that was meant to like save the institution from going default. They can easily liquidate it and convert it to cash or pay off debt or give it to the shareholders. But that screwed over a lot of bond holders, and that and a lot of bond holders are obviously unhappy and they're filing lawsuits now. Yeah, but there's a lot of drama going on with Credit Suisse. This definitely raises a lot of red flags. The crisis is not over. It's gonna be contagious. It's gonna spread, and for future investors, future institutional investors, that will create a lot of concerns among institutional future institutional investors, because as a future investors, I wouldn't want to trust institutions like that in the future. The fact they screw over bond holders and the investors right now investing in these institutions. So it's not looking good in the future. A lot of the investors are talking like, why should we trust these companies? Why should we trust these institutions? That in times of crisis they can just screw us over basically and just move on with a merge. But it's not looking good. So this bank crisis, I know the Federal Reserve was expected to raise by 50 basis points. That did not happen because they're trying to calm the market. The market was obviously jittery when with all this bank crisis going on. So they try to calm the panic by just raising it up by 25 basis points. That calmed it down by a bit, but I don't think this is gonna stop it right here. It's gonna spread. But yeah, that's my quick update. Look up, try to watch what's going on in Switzerland, because this is very important. Credit Suisse is the second biggest investment bank in Switzerland after UBS. This is big, guys. This is big. Pay attention to Credit Suisse and how they bypassed stakeholders' vote. That's huge. All right, I'll give you an update later on today. Thank you, guys. And leave a comment. Thank you.